now. So first things first, we're gonna go over um, market structure, right? So actually, I like how this one looks a little bit. Yeah, yeah. Okay, actually, I like this one a lot. All right, so look, the market moves in two ways. It moves up and it moves down, right? There's a downtrend, there's an uptrend. So for market structure, let's make this a little bigger. Yeah. Okay. For this one, obviously, okay, so what we're going to do, we're going to look at this one right here. This is a downtrend, right? Everybody's pretty familiar with that. This is the obvious downtrend. But for a downtrend, it's going to be lower highs, all right, and lower lows, all right? So how this works is, let me use this. It's going to start up here, right? Like it started up here, did its drop, came down, up. Each of these down ups, that's the structure of the market, right? So it came down. This was the high. This was the low. This was the high. Came down, low, high, low, high, low, right? So you're basically looking for it. It's gonna work as steps, right? It's gonna look like steps. So each one of these, this is the high. It came down. This is the low. It popped back up. This is now the new high, but it's a lower high because it's lower than the original high, but it's still a new high, right? And then it came down. Either one of these could have been a low, to be honest, but let's just say this one, low, popped back up, high, came down. Like I said, either one of these, low, high, and then low, right? So that's how market structure works, is right. It's going to be higher highs, higher lows, or in this case, lower lows, lower highs. We're going to go through the high as well, but this is how the lows work. Now, this is how you would leverage, kind of to. So how you use market structure? It's a couple of different ways, but how we're going to use it in this specific chart. Once the market structure breaks, which basically means, actually I'll go through it, but once it breaks, you're going to see a reversal, right? So with this one, it came down, up, down, up, down, down. Now it's forming a little W. Once it breaks the previous lower high, you're going to expect a reversal. All right. So now this one, it broke the previous high right here. And then look what it did right after these two candles. It came and respected the highs, right? So just showing that it's respecting the structure of the market, and then it continues to shoot up. So when you see the break of the market, which would have been right here, you're going to expect a reversal, right? So that's lower highs, lower lows. Let's go through, see if we can find, okay, perfect, right here. Now it's going to be the total opposite, or not total, but it's going to be the opposite for an uptrend, higher highs and higher lows if it's for an uptrend, right? So it's going to be the same thing. Start down here, come up, down, up, down, up, down, up, down, up, down, up, right? So each one of these, this is the low, came up, this is now the high, came up, this is now a low, but it's higher than this low, hence the name higher low. Came up, new high, it's higher than this high, so higher, higher low, higher high. Technically this one, it kind of broke it. Only reason why I say it didn't break it, because I'm sure on the 4-hour, this is a rejection. We can go ahead and look at it, but I'm pretty sure. But let's just be clear. Where are we? Yeah, see? It's just a rejection on the 4-hour. So this one still respected structure. Go back. So delete this. So higher low, higher high, and then you can see now it broke right here, consolidated a little bit, and then even came to respect it right here before continuing this drop. So once you see the structure of the market break, like I was saying, you're going to expect a reversal, which is what it did. So that's the market structure, right? Let's go on to the next one, which is trend lines. Trend lines is very similar to market structure, almost completely the same. Trend line, I like to start, so in this case, you'd start from when it started to buy up, kind of just like connect the dots and then just like go on like this. So how this works is going to be the same thing. Once you see one, okay, so with trend lines, as long as it's staying above this trend line, it's going to keep on going whatever that trend is, or it's going to keep on going up. Once it breaks, which is what it did right here, you're going to wait for the retest of the trend line to enter for the sell. Right? So it was popping up, down, up, down, up, down, still staying in this trend line. Drop below, this was the break. This was the retest. And then this could have even been like a little M, a little divergent M maybe. And we'll get to that too as well. But it broke it here, retested here, you would enter for the drop. And then it would be the same thing for a downtrend. So it could be starting at the top, making way down to the bottom. This one didn't have a retest, not really. It kind of just shot through. But most times it will, right? So it broke it right here. Maybe on like the lower time frame, you probably saw a retest. But if you look at the candle right here, there's not even a wick at the bottom. So there's probably so much momentum for the buy, it just kind of shot up. But we did see the retest, like I was saying, on the structure of it. So that's trend lines. It's very similar to market structure. Most times it's going to be the same area for the break and retest, but as you can see, like times like this, it wasn't. But that's trend lines and market structure so far. Is there any questions before I move on to the next one? I'm going to leave the trend lines here. All right, cool. Let's move on to the next one, which is zones. Zones are one of my favorite. Most def. Zones are one of my favorite because zones, so everybody knows the market repeats itself, right? Like it's going to do the same thing over and over again. All you're doing with zones is highlighting where it did those touches. So actually I already have it marked up here. I didn't even realize. So if you can see like where I have the zones, and I didn't even realize, I don't even know when I marked this up. So this is literally just a respected zone. I'm going to show you how you can kind of leverage the zones a little bit too. Wherever there's multiple touches, so it touched here, and then it touched again right here, right? It touched here, came up, came down, touched the same exact area. It's not a coincidence, right? So it gave two touches here, gave a little retracement right here in the same area, rejected it right here. This one, rejection here, came, touched, 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 and then a bunch of touches right here. It's not a coincidence that they're all in the same area, right? Same thing right here, gave some consolidation, some weird little wicks and stuff right here. It dropped, came up to the same area, dropped, came up, wicks, wicks, almost a wick there, and then dropped, right? So the zones are just highlighting kind of where the market has been touched the most times. I try and look for a few touches, but as you can see, even if we go down, there it's still being respected, right? So this came up, rejected this zone, came up, rejected here, came to the same zone, rejected, same zone. It was kind of just bouncing around, honestly. And then it came. So the thing with zones is going to be the same thing with market structure and the trend lines. You're going to wait for the break and retest. So this one came down, it broke it right here, and then retested up. And if you can see, it actually gave a little M right here. So you're going to look for a market pattern, which is what we're going over next, inside of the zones before you enter. But even off the break and then the retest, you would want to enter inside that zone for the sell, right? And then what it did was it came to the same exact zone that it did all the way in, when was this? This was in March. So it came and respected the same zone right here. And then let me see. Even if we move it over, it's still respecting the same zones. So that's kind of what I like about zones. Like you can literally just drag it and it's going to be the same zone. It literally came and wicked the same area. And then I don't think I had a zone under it. Yeah, I didn't even have a zone under it. But that's how the zones work. It's just highlighting where the market has touched multiple times, right? And then once you see the break, you're going to just wait for the retest, which was this one right here, the break and retest. Let me see if I can find another one. Let me see. Let me see. I guess there's a few of these that are. Came up, retested, came up, retested, came up, retested. Like they're pretty much all doing the same thing. And then let me see. Any questions on zones? All right, cool. Let's go on to the next one, which I believe is market. Yeah, chart patterns. So chart patterns. Actually, I have a file for it. Where is it? Right here. Chart patterns are going to be the market patterns that the market does just to kind of like show you where the market's going to go, right? So for these, everybody knows that the simple ones, M and W, or double top, double bottom, it's the same thing. What this does is just the market is, so first of all, this is a reversal pattern, meaning that it was going up before this. So it's a reversal pattern. So it's going to be at the top of an uptrend. You'll see this at the top of an uptrend. And then once you see this, you should expect a sell. All right. So on the M, you're going to look to enter on the second, at the top of the second leg. It's going to come up, come down. Once it comes up again, enter for the sell, stop loss above where you entered at. And then same thing for the sell or the W. That means it was just selling, came down, came up, came down. It's going to be at the bottom of a downtrend. And then you enter on the bottom of the second leg for the buy. Stop loss below. Super, super simple. I'm going to show you what it looks like on the market as well. And then the next one is going to be the head and shoulders. So it's going to come up almost like an M. Only thing is the second leg is going to be higher than the shoulder. It's going to come down and then it's going to pop up and almost sometimes match, sometimes it doesn't. But essentially it's going to be the same shoulder price as the first one. And then this is also a sell model. So you're going to enter on the second leg of the head and shoulders. Depending on how far the shoulders is, you could put the stop loss above the head or just above the shoulder. And then it's just going to be vice versa for the inverse, which is just going to be for the buy, enter on the second leg, stop loss down here, and then this is at the bottom of a downtrend. All right, so I'm going to show you guys what that's going to look like. Let me see if I can find a nice one. I know we saw a M. Yeah, perfect. So this is a pretty clean M. Came up, came down, came up, sell. This one's pretty easy. You're gonna use this as another confirmation because remember this was the break and retest. So it broke it right here, retested and gave an M. Now that's two confirmations for the sell. All right. And then same thing for I want to show you guys a W. So this is a pretty clean W as well. Remember I said at the bottom of a downtrend, came down, came up, came down, buy. So this one actually M, W, M, W. So it was just kind of going back and forth. W, kind of like that. Actually this one, so we can go ahead and jump into the head and shoulders as well. This one might be, it's not as clean. I'd rather show you guys the other one, but this one is kind of like a inverse head and shoulders, shoulder, head, shoulder, buy up. Like I said, it's ugly, but obviously had the same result. Um, there was another one I saw. Oh, boom, right here. So shoulder, head, shoulder. Same thing, bought up. This one also wasn't the cleanest, but like I said, same result. This one, let me see a cleaner. And all of these are kind of M's. M, M, and then, yeah, W. So it really is just kind of training your eye to see it. I want to show you guys a head and shoulders, though. There was a couple, but I want to see like a super, super clean one. Let me see, because I do remember seeing one, though. Let me see. This is a pretty clean head and shoulders as well. Inverse, shoulder, head, shoulder. So it's really just literally just going back in the market like how we're doing right now and just looking for the head and shoulders or the chart patterns. Nah, that's not one. Let me go to a different chart because I want to show you guys how it looks. So this would be a clean one. Same thing as an inverse, just upside down, or this one is the right way, really. Um, Came up, shoulder, head, shoulder for the sell. Super, super easy. You're going to see this. This is also a reversal pattern, so you'll see this on an uptrend. Shoulder, came up, head, came up, shoulder, drop. What's next? Divergence. Divergence is actually one of my favorite confirmations. I like using it with the chart patterns. I'm gonna show you what it looks like. So divergence is when the price is doing opposite than the RSI, right? So this price is going kind of straight or even up a little bit. If we don't count the wicks, is going up. And then on the RSI is dropping, right? So the RSI is the strength index. So the RSI stands for relative, I suppose, strength index. It's basically just showing you the strength of the market. You can use this as like a cheat code. So if this is going up and the strength of the market is going down, you're going to expect it to drop, right? Because this is showing you what's going to happen before it happens. So we could have entered right up here where the divergence is, and then look what it did. So you would use this as another confirmation, as well as like everything else that you already have in place. So I mean, even this one by itself, it went for 100 pips. The other confirmation that you could have used with that one, is the double top, right? So it came up, came down, came up, double top, divergence. That's two confirmations. I don't know what the zones look like. Let me see if it's in the zone. Yeah, and this is pretty much just making higher highs and higher highs. So there's no zone in this one. What's the other confirmation we need? Trend lines. It is, well, at the time, it's still respecting the trend line. So that's just going to show us that it is still buying up, right? So trend line down here. But I mean, that you wouldn't even really use that in this case. But just to show you how it would look, it's popping up, M, divergence, drop. I mean, it can get pretty simple. I'll show you guys another chart maybe. Let me see. Trend line down here. Actually, I don't think this one is in the zone either. I want to show you guys one with the zone. Yeah, this has been dropping. I like GJ. this one's also not in the zone. I mean, technically, this would be the zone, right? So it was here before. It was here, 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 here. Drop down. Obviously, now it's coming back up. If you can see, remember I was saying you want to look for the break and retest. So even on the 4-hour, we already have the break right here. And even it rejected it the first time. So that just shows that this this zone is valid because it rejected it first, came down, and then it broke it, and now it's literally retesting it right now. So as soon as it's in this zone again, I would look to buy it for the continuation. Or another confirmation I would look for just to make sure that it's going to be a buy. I mean, this divergence. So that's when you kind of just wait and see which come first, because this might just be popping up. This might be popping up just to get people out, because obviously on the daily, this might be just a big rejection wick. So we already have divergence. Maybe this is just a rejection wick just to get more people to buy it before it shoots down. I could actually see that happening. Yeah, see? Big rejection wick on the daily, but it did end up bullish as well, though. So that's something else I would have to look out for. But as far as the confirmations go, this one it's in the zone, has the divergence. I mean, it's definitely an uptrend. Only thing we would have to do now is wait and see what it does once it hits this zone. Once it hits the zone, if it comes back in, we'll know the divergence is going to sell it off. Or this divergence might just be to get it back in the zone and then for it to buy up, or for it to come in and reject this trend line one more time. Oh, okay, that's what I think it's going to do. So what it might be doing, it's going to pop up, come down right here, came up above the zone. I've seen this happen a few times, so I'm glad it's doing this so I can kind of like show you guys what it might be doing. Came up, rejected the zone right here, came down, went above the zone, but is rejecting it obviously. It's going to pop below to the trend line, come back up, and then what chart pattern is that? If anybody knows. Yeah, head and shoulders. Perfect. Exactly. Head and shoulders. Exactly. So what it might do, and this is actually good. I'm glad it's doing it because this is actually a pretty clean trade. I was wondering why the divergence was here, but now it makes sense. It's pushing up, trying to get people to make it seem like it's forming the higher highs, higher lows, get more people to buy it. But that's where the divergence comes in. It's going to shoot back down, respect this trend line, or come right here to the structure, pop back up to the zone, and then we'll see a big tank. So this one actually looks pretty clean. I might be looking to trade that. I mean, this is the 4 hours, so by the time it comes back up to the zone, this might be like the end of the week or like next week. But I definitely see this being a super clean, super clean sell when it does happen. But we'll just kind of see what happens around the zone and then just go from there. So buy it. So buy when it hits the line again. Yeah, if it rejects this trend line, so like for example, as well as the zones, you're going to do the same thing on the trend line. So like you see this W right here, you want to look for the chart patterns inside the zone and on the trend line. So it came down, gave a W, you would have entered for that buy off the W, or for off this W here. I mean, all these rejections right here, W right here, is literally showing you that it's giving you a chart pattern, or it's giving rejections that it's not going to go past that trend line each time. So you could have entered on the buy for either of those, and then yeah, for the sell. So when it comes back down, if it comes to this, I would look to sell it. It'll probably like mess around and then come to like around there, reject the trend line, pop back up for the shoulder, or maybe even pop up a little higher like around here for the shoulder, and then you'll see it. Oh, hold on. You'll see it break through the zone. Might get a little either retracement or consolidation. Break through the trend line, get another break, and then drop. And actually, if you look, this is the structure right here, right? So like this was the previous higher high. It rejected, drop, consolidated. It came down, hit the same zone, came up. So actually when it comes back down, I'm going to expect it to drop to this zone around here at the same zone and trend line. So around this area, pop back up to the zone, and then we'll see a sell probably reject and come back to the zone and the trend line, and then we'll see the continuation for the drop. So that's how you would kind of like leverage. So are we entering on the 4 hour? No. We're gonna enter on the 15-minute. Actually, I can drop down and show you how that will look. But this is how you would use all the confirmations in one, right? So we had the trend line, we have the zones, the market pattern, the divergence, and the market structure. All these very, very simple, not really strategies, but simple beginner level things, and using it to leverage it. And you can literally catch a big amount of pips on this one. So even when we enter right here, or even up here, I mean, for the sell on the second shoulder, even from zone to zone, that's 100 pips. Just taking it zone to zone. If we enter again, I mean, the next level is the market structure. That's 300 pips. You swing this, you're catching like a crazy amount of pips just from seeing divergence, a head and shoulders, market structure, and zones and like trend lines. Super easy. So longer time frames for patterns than 15-minute for the buy. Yeah, I usually mark up where the market's gonna go or forecast on the 4 hour, and then I'll confirm on the 1 hour. So yeah, this is gonna be a super clean head and shoulders. I can see it now. Confirming on the 1 hour, this looks pretty clean. And then on the 15-minute, you would want to look to enter. Yeah, this looks really clean actually. So actually, let's see. It would be, oh, whoops. It would be, I'll do it on the 1 hour. It would be, is this it? Come up, left shoulder, head. It'll probably drop down to maybe here, pop back up, and then we'll see the drop. This one's gonna be super clean. I'm actually gonna look out for this. But I like how this one looks. This is a super clean sell, but essentially this is how you're gonna use all the confirmations, right? And then you'll go down to the 15-minute, and you would look for some type of either like an M in here for when it drops down, like a little M here for the continuation enter on the second, or like, yeah, whatever it does, some type of market pattern inside of one of these zones, or inside of this area here. But you'll definitely see something or some type of price action before dropping, because even this one. And so actually going back to what you're saying about the 15-minute, you want to enter on the 15 or the 5, because even this one, this is actually an M. You just wouldn't see it unless you drop down to the 15-minute. I mean, to the 5-minute. Yeah. Ugly, but definitely M. Could have entered on the second leg up here. Super sniper entry. Stop loss above here. You could have caught all that. That's why I like dropping down to the 5-minute sometimes. Because you can see things a little more than most times. Even the M here, we wouldn't have seen on the 15-minute. It just looks like a bunch of rejection wicks. But that's initially how it's gonna look. I'm gonna go ahead. I'm gonna stop recording. Oh, whoops, wrong button. How do I do that? Here we go. Boom.